This is just water or this is mixed? Or this is coffee? And this is what?
Go for it. Yeah, we'll test audio. Can you? I'm gonna jump on live because like it really goes. When you live stream something, does it record permanently? No. No, it's just one time. Okay, well, with that, let's start. Good morning. Beautiful morning, Henry Brunswick. We're really happy to be here. It's my first time. I'm Carolyn Brown. I work for an organization called NACO. We're in the middle of sort of a name change because traditionally we supported angel investors. Traditionally, we have supported angel investors, but most recently we've expanded our mandate to include incubators and accelerators. So we're working pretty diligently and taking a long road approach to understanding how to best do that. It's a pretty diverse and big community. But like I said, our experience and our historical context is to do with supporting the investor. So investors, have taken sort of they take their experience and their extra capital and want to invest it back into entrepreneurs like themselves. And so we work to how to better facilitate that. So that's why we sort of brought everyone here today. We brought 3 investors from across the country to provide their perspective, input, advice, and really it's a chance for your just conversation, communication, and really trying to link up and network so that we can make everything, you know, get that great time. So with that, I'd like to introduce Melissa, who is with JEDI, and she will just do a brief introduction for today.
Hi, my name is Melissa, and I'm the Market Access Officer at the Illinois Economic Development Initiative, and we actually service the 15 First Nations in the province of New Brunswick. With that being said, I would like to begin by acknowledging the land at which we gather today is the traditional unceded territory of the Wolastoqiyik people, or the people of the Beautiful River. The territory is covered by the treaties of peace and friendship, which the Wolastoqiyik people first signed with the British Crown in 1725. The treaties did not deal with the surrender of lands and resources, but in fact recognized Wolastoqiyik title and established the rules for what was to be an ongoing relationship between nations. I would now like to introduce Elder Kevin Sakobi to begin with an opening ceremony.
Good morning, everyone. Thank you to the JEDI staff for allowing everyone to do that. Thank you to everybody for coming here and sharing space with me this morning. Just want to offer a prayer in our language, our beautiful philosophy that I welcome. I'm going to share a song with you and share a little bit about what the drum means to me, and hopefully we can all connect on the same level. So, Ketchumuni, which you know was it? Leaving the was welcome to the Benkiscop and Holy History of Virginia. Ketchumuni, which you know was it? Johnny Kachu was leaving the Western Bay of the wagon, the local wagon, the lines wagon. This was a glimpse of the leaving chill. Nitas Nagos from Sylvia NZD and of Sylvia. Chile and I believe in the was walking much children wagon. Elaine Benkiscop, Ezos, from Sylvia Vilayasas, leaving Sylvia and Sylvia again. Was welcome much to Sylvia and Susan. So in our language, I start by giving thanks. That's an important part of my daily habits to be thankful. We always offer our thanks to the Eastern Door. We ask our Eastern ancestors to come and be with us. With the coming of the sun brings new life. I think sometimes we forget because we carry a lot of what happened yesterday. And we're looking towards the future instead of focusing really on today. We honor the Eastern Door, we honor all 4 directions, but as Wabanaki people and as Wolastoqiyik people, we honor the Eastern Door because that's where the sun comes up. We honor the spring of the year, we honor all life, we honor all new life, we honor all children, we honor all babies. And we all have that child in each and every one of us, right? As we grow up, we lose connection with that child. And we have to be serious, we have to pay bills, we have to do all these things. We have to pitch to investments. But it's important to recognize and to channel that inner child, because I believe that inner child is what allowed us all to be here today and for us to be successful in whatever it is we choose to do. I know certainly for myself, when I started the channel to accept and to embrace the inner child, then the truth starts coming out. Sometimes along life we get sidetracked and things happen, and we lose that connection. So it's important to always embrace that inner child. Our drums are important. Our songs are beautiful. Our Wolastoqiyik language is beautiful. Not just because it's endangered or because our songs sound good. It's because of the connection that comes with that. And it's all a matter of belief and faith and power, right? We all have ancestors who are no longer with us. We have people who have passed. And I certainly, any time that I speak the Wolastoqiyik language, I think of my grandfathers. I didn't speak it when they were alive. I did a lot of stuff that probably I certainly don't do anymore, but I know they'd be proud of me today. And it's that connection that I share with my grandfathers, my grandmothers, and my uncles, all the people who have passed on. And we all have them people in our lives. And when we play this drum, stand with that drum, that's our connection. Our ancestors take notice when we start playing the drum. They immediately take notice. And when we have the faith and we have the belief, when we ask ask them to come be with us. They do. I had a lady come on, she shared with me, she said, Evan, you would never feel alone if you knew the amount of energy that walked with you on a daily basis. And I probably get comfort because I think in tough times, especially for myself, I would try to be alone. But it's in alone, it's in being alone and in the stillness where I found strength. My name's Evan Jacoby. I'm from St. Mary's First Nation. I'm the latest tree whistle, but I was not involved. I'm Evan Jacoby, which is a young system. We'll stick at reading now. I'm very proud of East New York. I'm very proud to be here with us today. I'm very proud of singing the song. And anytime that we have an opportunity to open events like this, we can all clear our minds and really ask for our ancestors to come be with us. If there's any time where we want to just clear our minds and clear our spirits and feel good, it's Monday morning, and we have some work ahead of us today. But this is the time when we take for ourselves, for our connection. In our language, we say "Sabil Bama." That means all our relations. We say that anytime we sing, anytime we end a prayer, anytime we start a prayer, anytime we go into a sweat lodge. "Sabil Bama." I ask each and every one of you to say that too. In your mind, all my relations. We have all of our relations who walk with us on a daily basis, who help us. When we start to acknowledge them, when we start to acknowledge them through singing songs, through praying, to just talking with them, they certainly help. I feel that. I feel that in myself, and I just hope that I can share that with you guys as well before you start your day. It is a beautiful thing. We all have connections to our ancestors, and that's what our ceremonies are based on, is a connection to our ancestors and to the land. Our ancestors are embedded in Mother Earth. So it's important to, for me anyway, anytime that I sing a song for anyone, I ask them to think of their ancestors. If they left yesterday, if they left 20 years ago, if we didn't even meet them, they were gone. Think of them, they're there. Think of their smiles, think of their laughter. Just think of them, ask them to come join us. This drum is powerful, they'll come. So I should just stand and think of it as the drum's playing. The song is a song in our language. It's the children's honor song. And we're asking Grandfather Legal to watch over our children. We're asking him to find our children, to give our children good medicine, and more importantly, to teach our children. And again, honor that inner child in each and every one of us. We're all children of creation, we're all children of spirit, so we give thanks for our parents, for our grandparents. Think of those ancestors. Have a good day.
I like that kind of reminder. Amazing. Thank you. So with that, we can start sort of with the day. We're a tiny bit behind schedule, but I think we'll be able to maybe eat a little faster and just keep the conversations going and flowing. And really, it's not about how it's structured, but about what you're getting out of it. So this is sort of a quick, very badly formatted slide on the agenda today. And from that, we'll just go right into introducing the three people that we've brought here to dialogue with today. So the first I will introduce is Peter Dorsman, and the second is Mona Khan, and the third is Sergio Escobar, and he's right in the back there. And I will allow each of them to come up and introduce themselves.
Okay, so my name is Peter Dorsman. I came to Canada about 20 years ago after a career in investment banking in Europe and Asia. And ever since coming to Canada, I've been involved in making angel investments, working with startup companies. I started in a fund in Vancouver that makes angel investments. And I do anything related to sort of early stage companies, entrepreneurialism, and money, and trying to ensure that we can build successes together. But before I came to Canada, the largest deal that I worked on was $2.6 billion. And I'm doing deals that are $500,000, $2 million. And I always try to explain to people that it's not that different. Whether you do billions of dollars or a few $1 million, it's always a matter of getting people together, getting a very complicated structure going, from a legal perspective. But it's more about building the relationship that can go on for a long time, which hopefully has a successful exit after a number of years. So whether it's large amounts or small amounts of processes of collaboration, risk allocation, and working towards a successful exit are pretty similar. So I will be leading the panel and do some Q&A with the other angels. I hope you learn from it and hope we can build relationships that go well beyond today.
Fantastic. Mona, I have you next.
Hello. Hi, my name is Mona Kong. I'm from Good News Ventures. It's an early stage startup out in Toronto. My background, I used to be an investment banker in Asia, then turned angel investor and then VC. So prior to Good News, I was and still are angel investor through a group called York Angels up in North Toronto. We're a group that has over 130 plus angel investors. And then through that, my partners, I met them there and we started a fund 2-3 years ago. We fund anywhere from pre-seed up to Series A, and we're industry agnostic. We like companies from all sectors, but we like to see companies that have some aspect of AI, IoT, blockchain, cybersecurity, or our B2B, B2B2C, and SaaS. And then we help our investees a lot. We reach out to them quarterly, and we see how we can help with introductions and strategy meetings and so forth, because we find that the more an investor can help out their investees, the more the chance of a good successful exit for everybody. The chances are greater. So in addition to York Angels and Good News Ventures, I'm also an external reviewer with OCE, Ontario Center of Excellence. And so I try to help out with the ecosystem by helping find a good deal flow and review companies for them. Thank you.
And Sergio.
Hello everyone. Bonjour tout le monde. Est-ce qu'il y a des francophones dans la salle? Non? Okay, francophone, intéressant. So I come from Montreal. My name is Sergio Escobar, and my partner at VC Ventures. It's a $12 million super angel fund, micro VC fund. We mainly focus our investment thesis on the B2B enterprise software. And of course, enterprise software, anything that leverages AI, big data, business analytics, business intelligence, that's our strength. Myself, I started my career as an aerospace engineer. I started as an operator with a spin-off of Pratt & Whitney Canada. We're a global aerospace tech startup. After that, I launched myself a company, an e-commerce company, got successful, raised money from angels, acquired all middlemen, sold the company 3 years later, then jumped again, someone convinced me to start another company. So I started a financial technology company, was the first company in mobile payments in Canada. We raised a series A with that company, have patents, we have many African countries using the technology as a SaaS right now. Exactly 6 years ago, I decided in Montreal, thanks to the advice from a good angel from Toronto, Raymond Luke actually, to bring to Canada many initiatives that were popular in the States. So I brought Founder Institute to Canada, I brought the first Texas Startup Weekends to Canada, and actually 3 years ago I was facilitating a Startup Weekend here at Planet Hatch with Sally. So I'm delighted to come back here again. I have been mentoring in different accelerators across the globe, been entrepreneur in residence for the World Bank, been a manager of accelerators for Texas in the Middle East, North Africa, and so on. I have a portfolio of 52 angel investments myself. And last year we launched this 12 million super angel fund, and I'm delighted to be here. So looking forward to meet all of you.
Thank you. I wouldn't have been able to do your introductions justice as you have. So with that, please.
Okay, so before we go into discussion, I'd like to sort of go through the trends as we're seeing them in the marketplace for tech startups and entrepreneurs. 8 big things happening. You know, there's disruption taking place across all sectors. When I started doing this work, it was mostly biotech and software. Now we're seeing every single sector, whether it's food delivery, whether it's agriculture, fisheries, every sector is developed by smaller companies with new ideas that help to sort of improve these industries. So there's lots happening. So if you don't have a software company or a biotech company, there's lots of other areas where you can be very successful as disruption is happening all over the place. My first angel investment was in 2002, and we raised $1.4 million to build a piece of software. Now we're raising $1.4 million to scale and commercialize a piece of software. And people expect software to be ready, angel investors expect it to be ready to go and put money in once it's proven and then take it to market. So it costs very little now to start a company, or a software company at least. It's very easy to get going with limited resources of capital. So that has certainly changed. I see a big increase in starting age. I see younger people here, but I'm working with entrepreneurs who are in their 50s and I work with a few female entrepreneurs who are well into their 60s. And they put a lot of their own money into their companies, which are in that case medical science and software companies. So you know, there's a big entrepreneurial wave across all ages, which is great. We're in Fredericton today. Recently I was in Whitehorse. I was in Victoria. You know, there's lots happening in smaller towns across Canada. You don't have to be in Montreal, Toronto, or Vancouver to have a successful startup. You know, to build it, to raise money, lots is happening in smaller centers across the nation, and I think that's great news. Part of that is sort of you see dispersed teams. I work with a startup company in West Vancouver. The CEO lives there, she works there. Her operations manager sits in Halifax. She has a sales team in Toronto, right? You can run companies across the country. You don't have to be anywhere in particular, and you can combine skill sets across geographical boundaries. Companies produce tons of data, right? It's not just the software you build or the medical science you have. The data you generate, the analytics that come from it is another huge opportunity. I see that, again, across all industry sectors. Number 7, growth of ecosystems. The way we're sitting here today, 20 years ago, 15 years ago was not the case. If you start a company, if you want to get going, there's so many resources, and it's through NACO, through Planet Hatch here, angel networks, industry groups, government subsidies, programs. You're not alone. There's tons of stuff happening all across the nation that helps you grow your company. So I think that's pretty exciting. I do workshops around angel investing across Canada. And I see all these networks emerging, even in very small places. And I think that's incredibly exciting. And then number 8, as angel investors, there's tons of money available. Ever since the financial crisis in 2008, governments have been sort of printing money, low interest rates, and that's still going. We're now 11 years into an unprecedented monetary cycle, an economic boom, and it's still going. I don't know how long it will last, but in my business, I see lots of money floating around, a lot of funny money, which means lots of money for early stage entrepreneurs. There's still a very high appetite to take risks and to diversify away from real estate, in particular stock markets, and to invest in early stage companies. So that's why you see a lot of angel funds starting now and other sort of vehicles that try to sort of pull capital to help build great companies. So lots of exciting things, lots of stuff happening, and if you're an entrepreneur and you want to get going, I think it's a great environment. So nothing should stop you from moving from A to B. So with that, Mona and Sergio, why don't you join me on the stage?
I think Sergio literally just stepped out for 2 seconds, so I'll come right back.
So Mona, maybe we can start with you as sort of first question. So you've seen my trends. Do you want to add anything to that?
Another trend I've seen is a lot of American VCs are looking for deal flow in Canada because a lot of the American companies out there, the valuations are crazy. And then with that and the attractive exchange rate, a lot of them are coming up here. And then on the reverse of that, I also see a lot of companies, startups that are American that wants to set up a shop in up here. Partly cheaper labor, exchange rate again, and partly the technical talent that they can get up here. I think a lot of you probably read last year about how Toronto was the 4th largest innovation hub in Canada, only behind Silicon Valley, Washington, and Seattle. And all the jobs of those 3 centers combined wasn't even equal to the number of new jobs created in Toronto last year. So I saw that as also a new trend. Also, I see more and more accredited investors going into angel investing. They're recognizing it as a legitimate alternative investment vehicle. Just in the group that I belong to, North Angels, it used to be 30 members when I joined 4 years ago, and now there's over 130 members. And another trend I've seen is companies, there's less and less IPOs. It's super rare now. Instead, there's a lot of strategic exits out there. Strategic investors looking to acquire a company, and the average amount that is spent on a company to acquire it is about $20 million US. So keep that in mind when you're trying to fundraise, because the less you raise and the more traction you get, the better later on when it comes to the valuation later. Yeah. And yeah, that's about it. Other trends I've seen.
So what's the topic?
Trends. Yeah. So what do you see for trends? So I touched on my report.
Well, these trends, because they're being so easy.
What?
Like nowadays,
A company with nothing. There is so many enterprise APIs and enterprise software for new startups. Like you can launch very fast. Like the disruption phase from e-commerce, now the Shopify's, Magentos, now have reached even have a company in Montreal is doing a SaaS to build SaaS. So you can build just a subscription thing, and you can launch an enterprise SaaS company from scratch, kind of a Shopify model. So there's all those new technologies that are popping up, and it's making it so easy and so fast for entrepreneurs to launch new companies. So I think that's the best time to launch companies or new investors and something like that. On the trend side, The challenging part is that there's a lot of Me Too companies. And actually, when I check on the companies on investment, I have three criteria for innovation. Is it a Me Too? Is it an incremental innovation or really innovative? The danger when it's really innovative is like quantum computing, something really cool, but it takes a lot of money, hard to build. When it's incremental innovation, actually kind of my sweet spot in the sense that it's cool, new technology popping up, but it's not that hard to implement. And when it's Me Too, it's a copycat. That means that there's no entry barriers for that kind of technology, that kind of software. Anyone can copy it. So that's part of the trends. There's a huge wave of Me Too companies because it's so easy to launch companies. So as entrepreneurs, what I always ask during the question is like, okay, you have spent launching or building something for 3-6 months a year. What's your defensibility? Have you thought about building moats around your company? Is it the data? What's the thing that is going to protect you? Because again, the competition is not only US, it's like Netherlands, it's Singapore, it's Hong Kong, it's like everywhere, and it's so easier to do fast and launch companies. Trends about AI. So in Montreal, I helped set up the program of Creative Destruction Lab in artificial intelligence. We bring 50 companies per year, and we do matches with the AI research centers in Montreal, the IBADO and the MILA. We have like Joshua Benjo, all the AI profiles in Montreal. So it's really, really trending AI. But again, now the companies are becoming Me Too AIs. We see always the same thing popping up. So yes, AI for drug discovery. Last year was cool. Now I notice more than 100 companies doing artificial intelligence for drug discovery. So what was cool and innovative last year, so with this algorithm, we're going to discover new drugs. We're going to disrupt the $1 trillion pharma industry. That was last year. Now there's 100 startups doing the same. So that's the trend. So we have to keep the base on the technology, keep the base, and then you have to be good at what you do, and you have to build moats so no one can come. Make sense?
Yeah, that makes total sense. So I see in my practice, I see lots of entrepreneurs approaching me with executive summaries, with business plans, hoping to get funded. Now, a lot of that is not ready to get funded. I mean, it needs a lot of work. So in what you're seeing with your funds, what would you advise an early stage entrepreneur to sort of focus on when they approach you? What is some of the key things? What do you really want to see to get excited and spend a bit more time with an entrepreneur? What do you want to kick that up, Sergio?
Just to complement what he's saying, so like when I became an entrepreneur, like all my friends that did the master degree or the engineering course were saying, Sergio, you're mad because we are refusing like a high-paid job at a corporation. You're nuts because you want to be an entrepreneur. Now it's the opposite in this new generation. Everyone wants to be an entrepreneur. It's like the rock band, the musician. It's cool. Like, what do you do? I'm an entrepreneur. Like, when I was 20 years ago, I said entrepreneur. Okay, so you're broke. Like, you don't have a job. Not launching, like I'm inventing it. Yeah, sure. So how do you pay yourself? Well, I have this company, right? So things have changed over time. So when you're launching a company, first, don't follow the path that you're doing this just to be cool. Because then it's very short range time you can do that. So like if you're really doing that, it's because you're passionate and you really want to solve something and you will really want to spend the next 10 years of your life doing that. You have to have that right. Of course. Like, do you think I spent 3 years, like 10 years when I was doing e-commerce company? No, I got acquired after 3 years. It happens, no shit happened, but that's life, that's the cycle of entrepreneurship. So the question was about what your advice. So the first advice is, and many people, it's very easy right now with the government to receive free money. I'm sure that you have people from IRAP, National Research Council, talking the doors. Hey, can you just build a module on analytics of any kind of algorithm? I'm gonna throw you between 50K to 150,000 grant subsidy. Just build some kind of AI module. government, we have money, we have to build technology. And you're, okay, like, I love that, but I'm just gonna do the model. So you keep building technology, stack, because, I mean, free money from government keeps coming to your door, and you're not gonna refuse, you're smart, right? But the thing is that you're so focused on these shiny objects, which is competitions, pitch, demo days, getting these grants, getting featured, I don't know what kind of magazine, that you lose a sight on what's really important and what's really happening to me when I was an entrepreneur. And there was no demo days, there was no pitch competition, no one featured in the magazine because you were perceived as a broke guy. But so the only option was one thing, was that sales. Because if I don't have sales, tomorrow I'm dead. And there's no catch up, there's no safety net. But it helps you to build a real company. So right now, what you should be focusing is build a real company, just get revenue. Doesn't matter if it's gonna be a unicorn, a high growth startup, or it's gonna be a small, medium business that makes like some kind of money for you to pay for a couple of employees, but at least do something with that. Don't go in that kind of trend of startups, just building, taking money from angels, taking money from government, and never do something.
And to add to that, realize that it's important to go to certain investors at certain stages of your startup. The first group to go to usually is yourself and friends and family to build the product. And there you'll find it's the easiest to set the valuation because usually they're not sophisticated investors and whatever you set will be it. Next group and then next would be also government. There's a lot of government funding out there and their criteria are very different from what an angel investor or a VC is looking for. So they're not so much looking for a high return as they are trying to support a company and to help create jobs and help the economy. So that would be the next group to go to. Then I would think of going to angel groups, and there's a lot of them out there now. And there they would expect to see some traction. They want to see some sales. It's rare that a company that's still building the product would be allowed in to the whole group to present. And then only when you get to a certain stage of revenues, I would say minimum low 5 figures a month, that would be, I think, a good time to start approaching VCs. That's when you are now looking to scale up. You've shown that there is some market fit to your product, and you need, say, about $500,000 to $1 million to really truly scale up your company. So I would go in that order. If you go in that kind of order, I think you would waste less time. And so do your homework before you go and just randomly, go do just any kind of investor. And secondly,
I was gonna say, would you start the conversation like maybe a soft conversation with an angel investor before that? So say, because if you're gonna enter into a long relationship with an investor, whether it's angel or a VC, that getting to know you can be advantageous for when you have the traction. So is that a suggested practice?
it depends. With VCs, there are some companies, we do track them. Like we've gone as far as 2 years before we invest in a company. And so it would be good in that way, but sometimes they may not take your because there's so much deal flow. We see hundreds and hundreds of companies a year. So yes, it would be good to start the conversation, but at the same time, they may not have time for you just because there's just so much deal flow out there.
So select those conversations strategically.
Yeah, exactly.
They're not formalized.
Yeah.
VC, but some of them more ad hoc.
And to tell you a secret from the point of view of the VC, the number one thing a lot of VCs look for is the founder. It's not so much the business model, it's the founder. And so they're looking for a certain type of personality in a founder. They want to see someone who, the word hustler is used a lot. They want to see someone who hustles, who perseveres, who's determined, who's willing to go through good times and very bad times. So that's why partly they want to track you, partly to see that you're at the traction that they're looking for, but partly to see if you make these predictions a year ago and then see if they come true. So keep that in mind when you're talking to investors. And another piece of advice is there's 5 major things that we look for in when we look at a company. One, I just said, founders. Secondly is traction. We personally, we look for, low 5 figures. It shows pilots, all right, but we want to see it as preferably MRR. We want to see that there's a market out there, that there's contracts in place with your clients, not just pilots in place. Thirdly, sorry, go ahead.
How about the profitability margin out of those 5 figures? Which is there?
Profitability, net income or just gross?
Both, like who would you value higher in those 5
Well, early on, it's highly unlikely a company will be profitable. It happens, but it's rare. So we do look at gross margin, like what is your share, especially in marketplaces. A lot of people, they come to us and go, look, my revenues is 100K a year, per month. But in reality, that's not their share. Their share would be maybe 30% of that, and that's what we look at. So you could go around and saying that, but we don't like it if you go around just mentioning that number. Don't tell us that, in reality, your share is 30% or 30K. Another thing that no one likes is when you have a bar chart and you just show the cumulative revenues. So of course, every month is just going to go up, right? Don't do that. No one likes to be tricked. Just be honest. We like honesty in an entrepreneur. Timing, that's also important. So you may be building a product that's great. On paper, it's excellent, but the market fit may not be there yet because your potential clients aren't ready for you. So you may be ready, your technology may be too advanced for what's needed out there. Like you built for your product to work, the client has to have A, B, and C. The client only has A or B, no C. Then you're not ready. So that's another thing we look at. Valuation. Like I said earlier, US valuation is just crazy. And then here, unfortunately, a lot of startups, they talk to the US VCs and they start telling them, oh, you're worth 10 million. You have $100 MRR, but you're worth $10 million. Don't talk to people, find out, get some ideas of what truly is your valuation, because you can alienate an investor by coming up with a crazy number from the get-go. If it's a little bit above, there's always room for negotiation, right? But if you say right away that it's worth 10 million and I think you're worth 2 million, then the gap is too big. No one will want to talk to you. Don't alienate anyone. Go and find out what truly the valuation is of your company. What else? Market size. So you have to have a big market size for it to be VC fund investable, because otherwise it doesn't make sense, because we're looking for big exits, because we know that the vast majority of our investments, unfortunately, won't work out. So for that 1 or 2 that do work out, we're expecting, say, 10x in 3 to 5 years. We need the market size to be very big, but if the market size of your company is not that big, then maybe the VC route, the angel route, isn't for you. Instead, it may be a lifestyle company, or perhaps you should be looking at debt financing, which ultimately may be cheaper for you to go that route. Having said that, you will find that the interest rate on debt financing will seem high to you, like it'll be in the mid to high teens. But you got to keep in mind that the companies, the loan officers are thinking, there's a good chance this won't work out and that they won't get paid back. So that could happen, that the interest rates can be pretty high for you. Other things we look for, founders, we love multiple founders in a company because they can, not everybody has all the expertise. We love to have 2 founders, one that's technical and one that's business oriented. We like to see traction where your early clients are big logos if you're an enterprise company, because and we like to see traction where you hadn't raised much previously. And velocity. I mean, that's great if you have like $20,000 MRR now, but if it took you 5, 6 years to get to that, you know, the velocity's not there. So.
Well, these are all great points, and I want to add to that on the founder part. I think that's the key part. If we look at people, I've seen companies with so-so technology, but with phenomenal founders with a very successful exit, and I've seen companies with insanely good technology but terrible founders collapse and they're losing their money. So it comes really down to people, and it's great that you raised that point. It's very key. So. I think it's supposed to be some of the interactive discussion you guys are here to learn. So who has got any questions for us? You can ask anything in relation to startups, raising money. Yeah, sure.
Hi, thank you so much for coming. My name's Colin Kevin. I own a company called Wear Your Label. We further conversations through about mental health through fashion and design. My question is really around I guess you talked about deal flow, and it's how do you stand out, right? So not only do we live in a city like Fredericton, New Brunswick, where we don't really have, angel networks or venture funds, but how do we stand out and really get meetings in a city like Toronto or Vancouver or Montreal, where our first interaction with that VC or that angel investor is through email, or is through a phone, or is through an introduction, right? So how do we really, make sure that we stand out, but also make sure that we get that face-to-face?
So the question is, how do you, when you come from Fredericton and you want to raise in Toronto, Montreal, and Vancouver, how do you stand out and get some attention from people on the ground? Well, I have an answer for that, but I want to give my answer would be sort of try and build a relationship with someone there. I mean, I'm working with an entrepreneur from Regina, and he came over to Vancouver and he found 4 or 5 potential angels, right? I met him on one of these NACO events, and he needed to get out of Regina because he could not raise what he needed to raise in Regina, which is otherwise a great place, but he was constricted in doing what he needed to do. So he built a relationship with me, and I liked it because I recognized certain entrepreneurial patterns. This guy is going to do well, so I helped him along. So that is sort of one avenue to try and find someone who's willing to spend some time. We've got 3 people here, so I encourage you to talk to them. But that will be my first sort of out of the gate answer for that. Build a relationship with people across the country. That's not always easy, I realize that, but that's a starting point.
Yeah, I mean, that's to touch the point of Mona, that we like hustlers. So, you're very good entrepreneurs, so you're a hustler, so you will find a way. So if you ask me, I know it's pretty much easy. We have connections here on Button Hatch. There has to be just checking team. Who knows the VCs that you want talking? Montreal, Toronto, New York, Boston. Who knows who? Ask the previous founders. There's a lot of founders here that went to 500 startups, that went to Techstars in different locations. Just ask them. Would you mind introducing me? You can check their LinkedIn's. They're connected. Ask them. Can you introduce me? Can you push the boundaries? And ultimately, even if people will say you can't do cold calls or do cold emails, I constantly receive cold emails, or even on LinkedIn, and some more people are pretty much clever. So you find a way to connect yourself. I do prefer to have introductions, like warm introductions from someone that I know. But if you ask me, pretty much all investors, our doors are pretty much open. We're looking for deal flow. We're looking for, it's the opposite. We're always chasing. We're looking for deals. So, just don't be afraid. So you have to become out of this stigma that I come from a small city and I cannot do that. Just take a plane. No kidding. Just take a plane, go to Montreal, go to Toronto, go to New York, and start booking meetings one-on-one. The best founders I had, I had a huge list of VCs of angels, and they were just one-on-one. and you have to hustle your way. Hey, Sergio, I'm coming next week to Montreal on Wednesday. Would you have time, anytime during the day? Bullshit. You're not going to Montreal. If the guy replies positively, you take a flight, you go. So, you have to hustle your way. The smart founders, I noticed that they do that. I did that myself a lot. So, go to conferences, festivals, look who's in a panel, who's in a conference, and, as soon pop and just chit chat with the person. And sometimes, you have to know how to do a good hustling. Because if you guys go kind of asking or begging for money, the people are gonna push up. But you say, hey, I'm, what's your name?
Kyle.
I'm Kyle. I have an innovative company from New Brunswick, from Fredericton. I'm really doing cool technology. Here's my card. Would love to have a time to speak with you later on when you have time. I'm really doing something cool technology and I like, and it's perfectly fit with your investment thesis. You already pick my attention. You leave my card and you leave. Okay. I want to follow up rather than coming to me, hey, I have this company, I'm looking for $100,000 or $500,000. Would you invest now? I don't know you. You're pushing me to make a decision right away. So you're pushing me to say no right away as a defense. So you have to push me to say yes.
Yeah, investing in the VC world, it's a process. But a lot of founders I find don't realize that. They only start raising when they need the money. You gotta start months in advance because it could take about half a year before you can close that round. So yeah, Sergio made a good point. Warm leads is more likely. I'll take that call if it's a warm lead. Someone introduced you because just the other day we were looking at our portfolio. There's 20 companies in there right now, and we realized all of them came through from an introduction, a referral, or from an accelerator that we went to. None of them were cold calls. So go to these events because we go to a lot of them because that's the best way to get deal flow is to go to these events, go to these accelerators, people who've gone through the programs and been so had some good mentoring in place. And also very important, have a good elevator pitch ready to go, and have a good 15-20 minute deck ready to go. I find some people, they have the huge, lengthy, 1 hour plus deck. That's just too long. That maybe that's needed later on, at the due diligence stage, but at the pitch stage early on, that's just too long. You gotta get your message across within 15 minutes or so. So I have this deck that just some guidelines I could share. If you write to Mona at goodnewsventures.com, I'll share that with you. And that just gives you an idea of what kind of slides to have, because there's always certain things that people are looking for, like competition, market size, and team, and so forth. And if you have that, then I think that helps a lot.
So can you be emailing?
Oh, sorry, Mona at goodnewsventures.com. So it's funny, recently I was on a web call with someone, and she pitched to a company that was pretty technical, lots of jargon, medical jargon in her pitch. But I kind of understood more or less, and at the end she goes, "Oh, did you understand?" And I said, "Yeah, you got your message across fine." And then, ironically, I found out a couple of days later that my husband had met her co-founder at some event somewhere, and he had sent that deck that I just told you about to that co-founder, and he had used it to come up with that deck. So, it's important to get the best, because, if you can't get across and they don't even understand what you do, then, you're not going to get another meeting.
Don't hesitate to leverage all other entrepreneurs. For me, the best introductions that ever happened were from other entrepreneurs rather than investors. It's funny. And there's a clever way that the most amazing ones, like they were kind of doing the deal on investors who are approaching investors. So we're reaching portfolio companies to go to the website, you can see the portfolio companies, check the ones who I think seems relevant that your business model is B2C, B2B, is it hardware? Reach out to that VC or that angel and ask questions to the entrepreneur. Reach them out, the entrepreneur is gonna be more willing to take you. Hey, like I'm building this, it's similar to this technology. I noticed that you were backed by this angel or this VC. Would you mind jumping on a 15-minute call to talk about, I would like to know if this investor would be a good fit. A fellow entrepreneur will always take the call with a fellow entrepreneur. We always help. And then you do your deal. No? Oh, so what would be the best approach to talk to Mona, to talk to Peter? The entrepreneur will tell you, he likes this, he likes that. So never use the same PowerPoint to all investors. That's also a good tip. Like the best entrepreneurs have like 100 different versions. And you craft your presentation, your investment proposal. I mean, if you send a proposal to Mona, to Sergio, to Peter, trust me, you send the same version, you're not gonna have the same results because we are humans and we have a perception and we have a background. So you have to check on the background. You have to notice, oh, Sergio loves fintech, Sergio loves service-based. So let me throw up something like, hey, I'm a big fan of this. Throw me some interest, So do your due deal, talk to fellow entrepreneurs. If that fellow entrepreneur tells you, you notice there's something itchy, scratchy, even if you want to raise from that investor, maybe it's not a good fit. So how's that?
So what I want to add is about the relationship building. What Mona said, like if you start to raise money, it's a long process. What I always tell early stage entrepreneurs is start working, build a network or build some advisors around you, with the idea of raising money in 6, 12, maybe 18 months. And people like us are more than willing to give free advice if you take us out for lunch or coffee. And it happens. I always tell companies, start that process and then meet with people on a regular basis, because then they can watch you over a longer period of time and see that you're hitting the milestones that you said you were going to hit. It creates confidence, it creates relationship, you can see where a company is going, and then an investment decision is so much easier once you know that person all that better. And as I said, there are a lot of people around who are more than willing, like former entrepreneurs or retired entrepreneurs, angel investors, who are willing to spend time and give advice for free or in return for a meal or a cup of coffee, and they enjoy it. So take advantage of that opportunity and build that group around you. And they may become investors and they may become board members and they may provide you with introductions as well, because as we said, sort of networking and building up sort of an infrastructure around you of people that can support you. It takes time and you need some help for that. Good. Any other questions? Over there.
My name is Mani. I'm from a company called JEDI Technologies. So we provide consulting services to startups around the world. So we have 12-year-old company and services to more than 500 startups in the technology space. My question is, over the period of these 12 years working with several startups, we have developed a lot of tools, products, and products and services. So how do you see funding for such service companies as the startup? Most of our services and the product itself are all digital.
Right. So the question is really, how do you attract funding for services companies rather than a product company? Right? It's a great question because it's not an easy question. So who wants to take that question up?
What I'd like you to see.
I don't. I'm sorry to have to give you this answer, but we usually, when someone says, this is my revenue this month, we'll say, how much is professional fees, services fees, how much is recurring, and we kept, because the professional fees is not so scalable, that's our concern. And usually they'll say, well, we use the services revenue as a way to bootstrap the company. But if you say that is what you plan to do, purely just services and not have a product that is scalable, then I don't think it's so, at least from our point of view, it's not so VC investable. But there's other ways to get funding for your company. like they said earlier, there's government fund, free money out there. There is venture debt, so forth. But unfortunately for our fund, we're not so interested in professional fees because it's not as scalable.
I mean, you have to defend why you're doing that. Like most of the AI companies I have seen start the consulting model. Why? Because especially the ones for B2B, because you have this algorithm and you have, to deploy it as a consulting professional fee into an enterprise to validate the algorithm and keep doing the batches. So it's more on the point that Mona touched. Are you doing the consulting, the service thing because you're living out of that? So there's no way that there's gonna be, a recurring phase after this pilot trial consulting thing? Or are you using this phase, to fine tune the product that one will be recurrent, but you need to pass through that phase to validate the technology, then that's smart. And actually, I'm about to invest in a company that passed for a year, kind of a consulting pilot trial phases with like big companies, and they are converting now on MRR, but big time, like plus 90 million ARR. But I was not tracking on the consulting phase that we're doing. I would have maybe skipped the deal. So you have to be very crystal clear on why you're doing things.
Yeah, you're right. Over the years of experience, we solve many problems for our clients, and we understand we are ready to move to a product based on the pains that we have understood in the market for various segments. So today, our ratio is like 15% from the products that we built based on understanding the problems that we solve, and 80% from consulting. So yeah, we move forward.
So I want to add, echoing that, you can build a very successful services business and have a great exit. Right? I've worked with a number of mobile developers in Vancouver who did an hourly fee base, and they grew into very big companies and they become very successful. And they use bank financing to grow. I've also seen a lot of services companies that bank all the spare cash that they have in building a product, and they became sort of real struggles for the founders. And I said to them, you had a great services business. You're wrecking, that service business and your financial health for building a product, which has a questionable, market. So, there's great opportunities in the services side, but it's not something that agents or VCs will necessarily invest in.
Like there's a company in Montreal that's just service, that you might know in AI, Element AI. It's a early consulting service business. It's more than $1 billion right now in valuation. I think they raised more than 500 million. Corporations from Japan, from South Korea, from China, from the States. It's just a service business, like McKinsey for AI. Really. Now it's gonna be worth the product, I'm still wondering what's the product, right? But depends on the topic, on what you're doing.
Good. Questions? More questions? Over there.
I would hear more about on renewable energy projects. So is there an interest on investing on a renewable energy project that you know what the future is going to be like? And I just want to understand more what your thought on something that's going to scale easiest energy saving and how we get your return.
So renewable energy is energy savings. Do we have thoughts on that? It's not your expertise.
What kind of, like, is it like just right now checking a company that's saving energy with the energy grid, which is a software?
So I work for, sorry, I should have started with that, you're right. So I work for a company that's called NACO Power. What they do is that they do renewable energy projects in New Brunswick. So we have a wind project in the north of the province. We also do solar, and we also do retrofit buildings. So I just want to understand more, for example, in the wind project one, you will invest in this project, so it itself, and then the return that as an investor you will get is all the money savings that comes out of that, and then so
I mean, there's a set of angels or VCs that will like that. So it's called more impact investment. It's a category called impact investment. So if you check at the bars in Toronto, they have the Impact Investment Center. So it's a network of VCs and angels that just do impact investment. So more, like you were saying, more for return for the society. So they are willing to accept a minimum, not a minimum return, but a lower return, but based on have an impact on society. So it's more, so that's why you have to be very picky on what kind of investor. That's why the first question you have to ask, what's your investment thesis? That's the first thing. Because if you like an impact investor, he's never going to invest with me in enterprise software. He will like more renewable projects, food tech technologies, agri-tech, more kind of that kind of thing. So you have to work, like check what's your best fit. It's like dating,
Yeah, I think that's an excellent piece of advice. So trying to figure out, so who you're talking to, what their interests are. And my friend, we had a number of fintech investments. We found it took a long time for them to get to A to B. So we got a little bit frustrated with clean tech. But there's lots of funds. Because it's a long process and it's not always clear where you're going to end up. And sometimes it's quite capital intensive. So I don't know a lot about your company, but a lot of them are capital intensive, which is another issue that you have to deal with in clean technology.
EcoFuel is an accelerator for clean tech. And you have Cycle Capital, they just raised 100 million and they just do stuff like that. So there is no capital. And I can do introductions if you want. Sergio at bcadventure.vc.
Are you familiar with the CBCA? So go to their website. A lot of VCs and private equity firms are members of that group, that umbrella group. So from there you get a list of them, and then you go to individual websites, and then you can find out more what each one does. And then NACO's website, I presume, will have a list of all the angel groups out there. So that's a good start.
And always ask people, like, okay, it's not fit. Would you know someone? You will see that the people are very kind. So like, okay, it's not a model for you, but you're not the best. Would you know someone that looks like that? You're fishing, always fishing.
That's great advice. Yeah. Because you get many no's. Every time someone gives you a no, say, that's okay. Can you know someone else? Yeah, exactly. How are we doing for time, Carol?
We're going to wrap up in about 10 minutes.
10 minutes, okay.
Yeah.
Good. So, any other questions that?
Hot question, like something that you don't want to last. Look at investors, you are.
Now's your chance to ask a group of seasoned investors.
How do entrepreneurs go about finding the right fit for them in terms of an investor? What should they be looking for when going into an agreement? Because it can be anywhere from 2 years to 10 years, right? So I've heard of instances where people have said no to money because it's the right fit. So what?
Okay, so that's more the terms of the deal. That's once you get into it?
Yeah.
Is that what you're referring to?
Yeah.
So how do you strike a first agreement with an angel investor?
Yeah, and when should you walk away from someone who's offering you money because it's not the right fit, it's not the right mentorship, or not the right network, or not, or they're,
You want to comment on this?
So first, I want to touch base that you were saying that there are no investors, there are no angel investors in Federated. Like, I will challenge you to tell you that's not true. Because everyone, I will see the other side. Everyone is an angel investor. You just need to find something valuable to their eyes to convince them. So first you start with people who are subject matter experts. So you're a clean tech. So now I'm sure there's gonna be Hydro New Brunswick. Reach out to vice presidents, reach out to directors, and then we say, hey, I have these good projects. You will notice that those guys are the best ever angels because they're wealthy, they have money, they have connections, they have contacts, and they're not gonna bother you, and they're gonna help you a lot, more than a professional angel investor. And founders invest in a company is kind of boxing at home in Los Angeles. The guy was calling, they have a list of all the amateur and former boxers, just calling them. He found a co-founder. One of former boxer in Boston says, oh, I know that. Yeah, I'm gonna invest like $250,000. By the way, are you looking for a co-founder? I just finished an MBA, I'm looking for something. Yeah, sure. Jump in. Do you want to do sales? Cool. Now here's a former boxer doing the sales for him, So that's the hustling thing, So when he pitched to me and said, hey, Sergio, that's how I did my angel round. I just calling former boxers. Like one of them, I convinced them to be my director of sales. I was, wow, this guy, like, I don't know how, like, he will do it, but he will find a way. Like, he's such a hustler. Like, he found, so he's so clever, So, I mean, I'm sure that you think that way, you look just subject matter experts for the field that you are deploying, and you have a lot of enterprise companies here, you will find a lot of people to throw money at you. So again, coming back to the point of Peter, of if it's a good fit for angels or not, it's a relationship, it's a dating. So, if you notice that there's something weird on the relationship, that maybe the investor is pushing on you, maybe, he wants, sometimes maybe he wants to find himself a job. There's a lot of angels doing that. But I'm gonna be chairman of the board. Ooh, that's fast. We start giving advice. How come you want to be chairman of the board? And or they will explain, you need someone in sales, someone in operations. My nephew will be a good fit. And I saw that so many times. And then he puts himself chairman of the board. Then the other one is his nephew, his cousin. So it's a takeover of the company, And slowly, because you need money, you keep accepting things, and then you just lost your company. So, don't be desperate for money. Just look for someone who's gonna add value. And the best thing you can do, and again, refer to the kindness before even investing. Ask for advice. Okay, what advice would you give me? How would you do this? So ask for mentorship. If you see that he's not willing to mentor you, he's not willing to guide you, or he's guiding you the wrong way, push on. Or he's saying, okay, yes, after I invest, I will introduce you to some people. Really? If he really wants to help you, he will do introduction right away. So, I mean, just as I said, it's a relationship, it's a dating, it's like you were dating a friend, and you're building a relationship for 10 years. Also, classify your investors also by categories. I have this guy from Boxer. He explained me very well how he was categorizing investors for his startup. He was saying, okay, this is the dumb investors. I was like, okay, what's a dumb investor? These people is throwing out money, like it was stock exchange. He doesn't care. He's not going to push me for reports. As long as once a year he receives an email from me, he's happy, and he knows about that, and I make it clear with him, that's a dumb investor, but he's throwing money. And he's rich, okay, and you find people like that? Yeah. Did you work like crystal clear with them then? Yeah. Okay, cool. And then you have the clever investor on the other side. He's gonna be pushing you, controlling you, asking you what have you done last week, what are you gonna be doing next week. So you have the complete range of plethora. So which one is good for you? That I don't have the answer. You have the answer. So what do you want? So first you have to ask yourself, what do you want? What do you need in terms of investor to push your company?
Another thing is, a lot of times we'll say to a founder that it's too early for us, come back in say half a year after you have more traction, but more often than not, they don't come back. They think that's our polite way of brushing them off, but it's not. You truly just want to see more traction. So it goes back to, it's a dating game. So come back. We like it when someone says, okay, it's been half a year, I want to show you my progress. We love that. We want to take that meeting. So yeah, so it's a process.
And the structure is set by phases. So I have this graph from Techstars. You have to have first your 10-second pitch, then your 30-second pitch, 1-minute pitch, 5-minute pitch, 10-minute pitch, 20-minute pitch, an hour pitch. But those pitches, you're gonna use them all. So by the time you're fundraising, you need to have those like 6 to 10 different pitches ready. Because you're gonna meet someone 30 seconds and convince them. What's the purpose of the meeting? Not to get money. What's the purpose? Get a second meeting. You did a second meeting, like 1 minute, 2 minutes. Then, let's go to my office. Let's go to have a coffee, let's have lunch. That's the third meeting. Then it's more like a 10 minutes. Explaining what's the purpose of that meeting? It's not to ask money. What's the purpose? Get another meeting, 4 meetings. meet my partners, meet my other angels, like let me check. So the purpose of the game is to keep flowing. But the thing is that many entrepreneurs, what I notice, they are not prepared. They ask, and then they come to the second meeting, which is a lunch or a coffee meeting or whatever, and then they don't have anything. Okay, where's your product roadmap? We're building it. Okay, so what you get from me for anything? Like, you don't even have a product roadmap? Okay, what are your financial projections? How are you gonna grow? You're looking to raise money. Yeah, I'm looking to raise 500,000, $1 million. What are you gonna do with the money? Hire people? Of course. Develop product? Yeah, but you said that you don't have product roadmap on the different next versions. So, okay, so what kind of people are gonna hire? Sales. Okay, have you identified people that you're gonna hire? No, not yet. Okay, so first you want my money, and then you will start thinking what kind of people I need, what kind of provide. So you start kind of rolling. So sometimes even if the founder is clever, even if there's a technology, but on the due deal, you start asking those questions, which is again dating. It's like asking questions. I want to know you. I mean, you don't have the answers. It's gonna be definitely a no, and you're gonna burn yourself, because in my book it's gonna be, he's not ready, he wasted my time, and so on and so on.
Okay. So also a great resource to Carolyn's question about sort of how to structure a relationship, that comes down to term sheets. So NACO has, and I co-wrote it with another Vancouver angel named Boris Mann, have the common documents. It's on the NACO website, and you can download all the term sheets from convertible to common shares to preferred shares to what we call a Canadian safe, with educational notes. And it's under the NACO website, and it's under NACO Academy, and it's called Common Docs. So it's been downloaded like 30 or 40,000 times so far by entrepreneurs and angels across Canada, and it's a great free resource for you to get going if you start to raise money. You want to educate yourself on sort of what sort of terms you want to take money in on the company. So I strongly recommend looking at that. One more question, and then I think it's time over there.
Do you guys approach? Do you guys have a different approach to entrepreneurs who are their first venture? Like, is there a different way of looking on their business model given, let's just say, a seasoned entrepreneur that has many ventures, or versus one who's, just kind of.
So the question is a different approach to a first-time entrepreneur or someone who's done it before?
Yeah.
Well, someone who's done it before is always good to have. I work with one company that's a repeat entrepreneur, and he's learned so much from all the lessons that he had in the first company that he became very bankable because he had an exit. I can also tell you there's one company that I was a shareholder in. It's a company that exited during the tech boom. They sold the company for $23 million after 1 year at the concept stage, and everyone poured money into his next deal. The only problem was the market had changed. It was no longer about cool ideas like it was during the internet boom in 2000. It was executing on ideas and commercializing the technology, and he failed at that, and that became a horror story. And cap table was a who's who of angel investing in Vancouver, and we all lost money. So it depends sometimes, right? But generally, my feedback would be repeat entrepreneurs. It's good to have.
I mean, we're in Canada, so the number of repeat entrepreneurs is very low, especially if you go outside of the main markets. Montreal is one of the top 3 cities, but still, we don't have a lot of repeat entrepreneurs. So most likely we have a lot of first-time entrepreneurs. When I say first-time entrepreneurs, and I agree with the criteria that Mona explained, I look at a lot of advisors. So if you're a first-time entrepreneur that doesn't have subject matter experts advising him, mentoring him, for me it's a huge red flag. Because it means that, for me it's very much simple. He doesn't know what he doesn't know, or he doesn't know what he knows. So, when I was launching myself with this fund, I have a lot of advisors, like seasoned VCs in the US. They keep mentoring me, they keep giving advice. I even have a couple of institutional billionaire, limited partners that keep giving me advice how to do that. Why? Because there's things I don't know that I don't know. So I need to find people okay, guide me. So because I'm a first time fund manager, so the same time it happened to you. So I said myself, in my career I was launching first time, and I surrounded myself with co-founders that have that expertise, that have advisors that have expertise. So as an investor, it diminishes the risk. Okay, so he knows that he has limitations, and he's surrounding himself. So let me check with the subject matter experts. Let me check if he's very well coached. Let me know if he knows all the risks. And that's the main failure, I think, of first-time entrepreneurs. Sometimes they fail to surround themselves with experts because they think they know everything. And the reality is that it's very hard to know everything. Most of the time you don't know anything.
It's always good to have founders who've had previous companies, and even if they were failures, you learn from failures, right? You learn lessons from them. So yeah, we do look for that. And changing subject a little, we also look for founders who are full-time. We will never invest in a company with founders who work part-time, because we're investing in you, expecting you to do this full-time, put all your heart and soul into it. And if you're saying, well, I need to do this part-time, it's just a hobby, we're not going to invest in it.
Okay, I think that was it. I think we're at our time limit.
Well, there's a few minutes left, but now we're moving into the next sort of section of the morning, which are the one-on-ones. So there's obviously 3 different rooms where each person will be, and there are schedules that have been printed, so you can take a look to see where you'll go first. There are 15-minute time slots to just sit and have a very personal, honest conversation. Use it for what it is, which is just some FaceTime to get some fantastic advice and feedback. And so I will put each one of these investors in a room, and then it starts, the first one is at 10:45. So feel free to mingle for the next 15 minutes, and then at 10:45 is the first one-on-one. And great, thank you very much.
Did you came? Wait for you.
It's on the wall. There are schedules.
Here we go. Hey, how are you? You see?
Oh, yeah.
Yeah, I haven't gotten back to you. Sorry about that. I will soon.
Okay. How can I have you?
Yeah.
I don't know where these are printed. Other, so great. Are these, they're. Please have your. Everything's so old.
I'm gonna put it right here, so people can see it as well.
Yeah.
We're.
I am.
Yeah, we met in Yukon.
Yes, that's where I was thinking.
Yeah.
Thanks, very good. How are you? Good to see you. Thank you. Good to see you. Welcome to your Brunswick. Yeah. He's ready. His job is it's expected by, but I don't know if they're coming in. He's going into China today. How was your flight into
My partner's in the law firm.
But you know,
You're traveling from
Vancouver.
Vancouver, yeah.
Yeah, I was gonna say.
How are you, darling? Good to see you, yes. How's everybody in Vancouver? Yeah, I know, isn't it beautiful? I find that very similar to Ottawa.
Yeah, kind of greenery, water.
Yes, yeah.
This one is freezing.
Yeah. Yeah, it is. I I'm at Fonz and, yes, yes. JEDI is on the north side, so it's about 10 minutes. Yeah.
What's this area?
This is south side, and this is the industrial park. Everything is in the so it's more changing.
Right.
Yeah, so I think this is a really great spot for entrepreneurs. Actually, our last accelerator program was taking place here, which was a lot of mentors and opportunities.
I wanted to know about Startup Fest. I don't know why he needed to know so much in a rush, but we got switched to whatever I had on my phone. I don't know where that came from. That's not us. Yeah. We could ask one of these people to switch and then make them back to back, and then
Good.
instead of hanging around.
Yeah.
That's not a bad
It's
idea.
also got an indication that's kind of,
Could do
branded to it, so
NACO,
it's also appealing.
or we could do what's that?
Yeah, sure, yes.
Interesting.
Yeah.
So let's see.
Right now, we're
Yeah.
promoting her with that one.
Yeah.
House. So tourism sees it all, so tourists want to see education products.
We got the two.
Especially for the indigenous parts of areas, right? And I decided to celebrate the anniversary here. Yeah, we've been around for a while.
Is there anybody here that's
Later in his career. Now, so it's becoming more exciting.
yeah, we can get them out of the way
We did that.
soon. True, yeah.
Yeah.
They're both black. Yeah.
I'm from Venezuela.
Quite
So there's a
trying to see
lot
how
of
the
I know. Soy europea. When they hear I don't know. But I didn't have the thank you so much. I also want to learn more about how it compares.
It is now.
It's
You know, one by one, and get the feedback.
we don't give them
Yes, so right now,